You mentioned former Treasury Secretary Steve Mnuchin, and he swooped in to help with the regards to New York Community Bank. He got a group to put together, $1 billion worth of investment, and he came to the rescue there. What do you make of that move? What do you see the role of private equity now in this banking sector starting to fall apart?
It's really kind of interesting because private equity was just very tiny prior to the crisis. But once they had access to all of that free money, you can look at the graphs on the growth of private equity, and that's huge. And so definitely inside of the banking sector, we're seeing it. And hey, Steve Mnuchin did that the last time during the banking crisis with IndyMac, which had a ton of mortgages, and they changed the name, but they were known as the foreclosure king, which he does not like that title, but that is what happened, not even giving people the opportunity. I think that this is significant because, again, now he's talking about buying TikTok. So private equity means a greater shift of those assets into the few hands, into that 1% or the 1% of the 1% hands. And isn't it supposed to be that, according to the World Economic Forum, we own nothing and we're going to have to rent everything from these private players? So between your big tech companies that know everything about us, right? And whether it's the private players or the tech companies, I mean, this is an awful lot of power concentrated in just a few entities. What kind of control? I mean, to be perfectly honest with you, when you look at the revenues that these entities can generate, private equity doesn't have to report as much as the other entities do. But when you're looking at the power that they wield and the assets that they're buying up, it gives us a lesson, actually, because they have the ability to do that because they have the ability to gather cash. That's what gold does for an individual. It enables you to hold your purchasing power so that when those income producing assets that are currently at nosebleed levels, when those collapse, and we are looking at a real estate collapse, and not just commercial real estate, but we're also looking at it in multifamily real estate, and we're looking at it on a global basis, and even the price levels of the single family homes that, I mean, the younger people have discovered the American dream doesn't really exist. Real estate is a key asset for most on a global basis. So again, this is a global issue, and we're watching the real estate market implode in other parts of the world and coming to a theater near you. We're going to see that in this country too.
So it's fascinating how you're emphasizing this wealth transfer, essentially.
Oh,
World Economic Forum says you and I will owe nothing and be happy, whilst they're advocating for this renters economy. But you've got to rent from someone, right? So
exactly.
You go ahead.
Well, and I was going to say, what all of this technology enables is tokenization or assets to be turned into tokens of everything, anything that's tangible, including a glass, including the clothes that you're wearing, absolutely everything. And then what do? You hold all of this on your phone, and how easy is it to spend? Because basically the whole world has become consumer driven because there's really, who else is going to support it? All that wealth has already transferred. Now the key piece here, and what I pay attention to very closely, is the risk transfer. Because once they have made enough risk transfer from the few to the public, to the many, then you will see that maintaining and propping up this system has just gotten too expensive. And all of a sudden, that's when you'll see the stock market crash, the real estate market crash, the derivatives market. That's the one that continues to scare me because we don't even know the value at risk. And every single key player, the Bank for International Settlements, the IMF, in this country, the FDIC, the Fed, I don't care what entity, the World Bank, every single one of them tell you that the market value of these contracts, nobody has the true understanding of the true value at risk. That's the one that when there is an obvious explosion there, because remember, that's under the surface. We can't see it. That's an opaque market. That's the one that scares me the most, because that will easily overwhelm the central bank's ability to print their way out of it. And not only that, it's that confidence piece that there's just one little layer of confidence left, and that's the public confidence. And that is eroding really, really quickly, and has eroded in other countries, just not quite in the US yet.
Right. Every time you bring up that money printer, I smile. It amuses me because it's actually costing you more to do that than it does a central bank to go click, click, click. We don't even have paper money anymore, right? For the most part. Now, Lynette, you mentioned tokenization. Larry Fink of BlackRock, very big proponent of tokenization, seeing it as definitely the biggest trend in the future. But I want to bring it back. I want to bring it back to the banks, right? And
Yes.
we're seeing, on the one hand, if private equity steps in and saves these banks, you talked about public trust. Does that then sort of negate the crisis, right? It saves regulators from having to do this in a way. Perhaps it even saves individuals from being bailed into the bank. Does private equity, although that has obviously detrimental long-term impacts in that, as we discussed, more assets consolidated in fewer hands, does it prevent or delay the banking implosion?
It could. I mean, that's a really good point, Michelle. It certainly could postpone it, but it won't postpone it for that long, because they are also, and they know this. So if they're balanced with gold, but if they're not balanced properly with gold, they're still getting all of these underwater assets, but they're buying them when they're underwater, right? So the current banks that are holding them, they're the ones that are underwater. When Steve Mnuchin came in and bailed out that bank, he was paying this much for those bonds, not at market value. And it makes it even more dangerous. So it could certainly postpone it.
Kick the can down the road, because that's the thing. We have a lot of experts come on and everything that they say makes sense, right? But we also have guests that say what is inevitable is not necessarily imminent. And I get that currency life cycles run out, and I get that the fiat hoax has to eventually end, and eventually things will blow up. But many would say we've been expecting this 2008, 2010, and we just get this can kicked down and down and down the road. And again, I'm certainly not rooting for it to happen anytime soon. But if it's just yet another stopgap measure, in the sense that you've got private equity now to come and save the day, and tokenization as a new way to delay the problem, what does this mean for this original timeline that you had of, I think you said last time we spoke that you expected an implosion within 2 years? Does this change that?